Many growth stocks are stalling right now, as nearly every sector faces headwinds thanks to rising inflation and high interest rates. Despite the pullback, there are still great companies out there. They have fantastic long-term potential. Welcome to the Financial Market Examiner YouTube channel, where you learn about forex, crypto, and the stock market. Well, on this channel today, we'll see the top 3 stocks to buy now. 1. CrowdStrike. Cybercrime is on the rise, identity theft and other crimes will come at a very steep price. Cybercrime will cost an estimated $23.8 trillion globally by 2027, up to $11.5 trillion this year. And while that is not on the comforting statistics, the flip side is that all these trades are creating a massive cybersecurity opportunities for companies like CrowdStrike. CrowdStrike is tapping into cybersecurity opportunities with its cloud-based security services that help protect computer systems and mobile devices. And demand is soaring. Even with the backdrop of macroeconomic headwinds, CrowdStrike sales increased 48% year over year in the fourth quarter to $637.4 million, driven by a 48% spike in subscription revenue to $405.4 million. Building up a strong cash position at the end of the most recent quarter, CrowdStrike had just $741 million in long-term debt with $2.7 billion in cash, with tech investors getting increasingly worried about the potential economic slowdown. Could put most CrowdStrike shareholders at ease about the company's long-term viability. With the company's robust sales growth and solid cash position, CrowdStrike looks like a strong cybersecurity play that could have many years of growth as this market continues to expand. 2. Amazon. Amazon may seem like an odd choice on this list right now, considering that the company is in the midst of significant layoffs and its share price has declined 36% over the past year. But focusing too much on these short-term issues and overlooking Amazon's long-term opportunities would be a mistake. First, Amazon is still the leader in the cloud computing market with its amazing web services, accounting for 33% of the market, and while competition is increasing in this space, AWS is still growing. Sales from the segment rose 29% in 2022, reaching $80.1 billion, and operating income grew by 23% to $28.8 billion. Another area of long-term opportunity for the company comes from advertising. Yes, the ad market is a bit unstable right now, but that doesn't mean its story is played out. In 2022, Amazon's ad business generated $37.7 billion in sales, a 21% increase from 2021, and there's likely more where from that come from. Amazon still trades Meta Platforms and Alphabet Google on the US digital ad market right now, but its position is growing and to take an estimated 13% of the market by 2026, according to Market Intelligence. And as it grows, some estimates suggest Amazon's ad business could reach $64 in annual revenue by that year. With the company making significant gains in the digital ad space and still maintaining its dominance in cloud computing, investors may want to look past some of the company's recent speed bumps to the broader opportunity with their stock. 3. Microsoft. Microsoft has proved itself to be a resilient tech company that has reinvented itself several times over the past few decades, including its pivot to cloud computing, and the company is doing it again right now as it focuses on artificial intelligence. Microsoft's early investment in OpenAI several years ago is looking like a very wise move right now, as the company's advanced chat box, ChatGPT, has taken the tech world by storm. Microsoft has already implemented ChatGPT into its Bing search engine and its Microsoft 365 suite of apps to tap into these AI demands. The market of AI-infused software is still getting started, but IDC estimates it will exceed $500 billion this year. Already, tech companies are beginning to orient some of their services around AI, and Microsoft's early bets could end up setting it apart from lower moving peers. And of course, AI isn't Microsoft's only growth strategy. The company's move into cloud computing years ago continues to pay off, as its Azure cloud business has continued to grow. Sales from the company's Azure and other cloud services segment popped 31% in the most recent quarters, and the Azure shares of the cloud infrastructure market continues to climb. Microsoft now owns 23% of the market, up from just 15% in 2019. And Microsoft could continue to tap further into its cloud opportunities as the public cloud market grows from $525 billion this year to an estimated $882 billion by 2027. There's no getting around the fact that many growth stocks are suffering right now as interest rates increases. Inflation is still high, and some investors fear a potential recession is around the corner. But despite these concerns, long-term investors know that buying and holding great companies that have strong advantages in the respective markets can pay off down the road. This means that benefiting from these growth stocks could require some bout of schizoism, while all the investors are panicking. So with this, we'll come to the end of the video for today. Kindly share with us your feedback in the comment section. There are several educative videos on this channel where you learn more about the financial market. Note that this video is not for financial advice, but for educational purposes only. Kindly subscribe, share, and like after watching. Thank you.